What is money exactly? And with the rise of digital assets, is cryptocurrency actually replacing the traditional systems we've used for centuries? To understand the difference, we first need to look at modern money, known as fiat currency. Unlike the past, most money today is issued by governments. It is managed and controlled by central banks, like the Federal Reserve in the United States, which has the power to influence the money supply. Similarly, the Reserve Bank of Australia and other central banks globally manage their respective currencies through policy and supply. Importantly, fiat money is not backed by physical commodities like gold. Its value comes from the stability and trust of the government that issues it. One major characteristic of fiat is inflation. As more money is printed, the purchasing power of each individual dollar tends to decrease over time. This means that the same amount of money buys less today than it did years ago, a process that happens steadily in most developed economies. In fact, almost every major global currency used today, from the dollar to the euro, operates on this fiat model. While inflation typically averages around 2 to 3% annually, it remains a constant risk to long-term savings. However, economic shifts can cause inflation to spike much higher, rapidly eroding the value of the currency in your pocket. This is where cryptocurrency enters the picture. It offers a completely different approach to how money can work in a digital age. It all started in 2009, when an anonymous person or group named Satoshi Nakamoto launched Bitcoin, the first decentralized currency. Unlike fiat, crypto runs on blockchain technology, a public ledger that records transactions across a vast network of computers. One key difference is scarcity. Bitcoin, for example, has a hard-coded limit of only 21 million coins that will ever exist. New transactions are grouped into blocks and cryptographically linked to the ones before them, making the history nearly impossible to change. This verification process is handled by the network itself, rather than a central bank or a single government authority. Beyond simple payments, platforms like Ethereum introduced programmable money, expanding what blockchain technology can do. This enabled smart contracts, self-executing agreements that run automatically when certain conditions are met without needing a lawyer. When we compare the two, we see a clear contrast in how value is controlled, verified, and transferred. Fiat is centralized and government-backed, while crypto is decentralized and governed by code and network consensus. Fiat serves as legal tender within specific borders, but crypto is inherently borderless, allowing for global transfers without traditional limits. Traditional banking relies on intermediaries to process payments, whereas crypto enables direct, peer-to-peer transactions. However, cryptocurrency faces significant challenges, most notably extreme volatility, with prices swinging dramatically in very short periods. Events like the collapse of major exchanges have highlighted the counterparty risks and the dangers of keeping assets in centralized crypto platforms. Despite the risks, adoption is growing, with hundreds of millions of people now using or holding various forms of cryptocurrency worldwide. The total value of the market has surged, with Bitcoin's market cap reaching hundreds of billions of dollars at its peak cycles. Efficiency is another factor. International bank transfers can still take days to clear and involve high fees from multiple banks. In contrast, a crypto transfer can settle in minutes, regardless of where the sender and receiver are located in the world. But users must navigate regulatory uncertainty as governments around the world struggle to define and tax digital assets. Security is also a major concern. Hacks are common, and losing your private keys can mean your funds are gone forever with no way to recover them. Speculation drives much of the market, leading to crashes where values can drop over 50% within just a few months. Ultimately, it's a trade-off. Fiat offers stability and government backing, while crypto offers decentralization and scarcity. Money provides stability and control, while crypto provides freedom and volatility. Both have their place in the modern financial landscape. As we move forward, the future of finance may not be one or the other, but a world that includes both.